Welcome to Markets Now. I'm Michelle Rook with Scott Varlick of Koima Varlick. We're seeing a little bit of an easing back in the grain market this morning. Livestock futures have been mostly higher. And Scott, thanks for being with us. Let's talk about the cattle market. Keep making new highs for the move. And of course, yesterday we got pushed by higher cash. It was almost surprising just because of the timing right ahead of a cattle on feed report.
Right. And thanks for having me, first of all. And it's been a great run, and cash has been king. It's been what's leading this market higher. And kind of as you alluded, I mean, there's a cattle on feed report today. So usually we're always kind of waiting for that cash market to develop, after that report. Packers will not show their hands and try not to bid, but saw some shooting higher prices on Thursday. There's been producers trying to get 190 for a few weeks and coming up short, getting the 188. Suddenly we hit some of those 190 sales early, and then there was some up to 192. So we saw 190 hit some traction from the north to the south, Texas all the way to the Dakotas, and then all of a sudden we did get some 191 in the south, some 192 western Nebraska, some in Iowa. So those prices really surged. And I don't know if anybody expected it just to blow through what some of their asking prices were. So I think that's a great sign. It's just going back to these tighter numbers. We're still there in that part of the cattle cycle. We're feeling current, even though some of these weights have been larger. It doesn't really feel like that's the story in the feed yard. We're getting several packers bidding. You're able to get them scheduled when you want, in a timely fashion. Some of them are close to the knife, some are scheduling farther out. So you have a lot of options out there. And for a negotiated trader, having that ability, that we're not getting just blackballed and beat up in this market here, just tells us how tight this thing really is. And we've seen some of these slower chain speeds, and we're still seeing tight numbers. So we're feeling very current. That's what's got us to where we are. It's probably the what can we do from here that everybody's going to start asking about.
Yeah, no doubt, because we're going to have some negotiated cattle that are going to start, not negotiated, some formula cattle, that are going to start coming up, right?
Yeah, we've got our, November contracts. There's going to be, Packer seasonally always has plenty of contracted cattle that for that November, December time frame, and they dangle quite a few carrots for that, those November contracts, because you've got usually a difference between the October and December usually with a little bit of a premium. It's not happening this year with this kind of front-led market here. So usually there's plenty of producers that will look at those November contracts. They're appealing. Packer makes them a little bit of a deal so they can have a pretty good amount of cattle here. So I think I want to watch and see if they're going to start pulling from those contracts in the beginning of the month, or if they're going to try to get cash cattle in the country and then pull them in the end of the month. So we'll be hearing that real quick here next week. We'll probably start to hear if they're starting to schedule some already for the beginning of November. And I guess I'm of the attitude, I'm leaning that they're going to want to pull those cattle a little bit quicker if they don't have numbers around them. So that all feels good. And we'll just have to kind of be watching that over the next couple of weeks.
Yeah. And as far as the futures, like I said, new highs for the move. We're probably getting a little hedge lifting this morning, but we're running up into resistance areas. And so do you think that we're going to start maybe taking a little pause?
Yeah, we're all pausing a little bit when we're trying to decide what this market's going to do. I mean, we've made it right near the 190. We've got the April contract getting above 190. So it's what can we do from here? What's the encore? I mean, part of me wants to stand up and say, here we go. We're going to 220. Yeah, I would love to just really stand up and be in that camp. The challenge is interest rates are high, in the amount of the amount of money we're putting towards these feeder cattle and the cost that we have, the size of our cattle notes with our bank. Yeah, it's nice to be bullish, but we're seeing a lot of risk there. So guys have had to try to carry a few hedges and use a few hedges on this rally. So it's been a little bit tough. Do I start hitting some of these margin calls or not? Can we shoot through? I would love to say, yeah, we're going to just charge on through, and we have that ability to do so. I think with just our pure supply, plus sitting on good demand. Choice select spread very wide. So I think our demand has been great. So we kind of have some of those fundamental tools that say we can do it. But my bottom line is at a lot of risk. So I'm having to try to find ways right here to make sure that I have some kind of protection on. If I got to look for some upside, kind of kick off, that can be done as well. But these puts have not gotten very cheap. I mean, that would be the nice thing. Say, hey, I'm going to put a floor under this market and just let it go. But I think the market is also very aware of how high we are. So some of those puts are really high priced, and you're looking at the dollars per head that you're going to spend to put a floor on, and that's quite a few dollars. But we do have a lot at risk. So the price of doing business has just probably went up a little bit as high as we are, and we'll flutter around this 190. I think we're going to know real quick. We're going to get this report out of the way, and maybe that's going to hurt us or help us. And it's probably going to have a little bit of weight, in my opinion, that we're going to follow with what this report does.
Yeah, and placements are average trade guess 96%, but this is the report that wrecked our record market last year, isn't it?
Yeah, happy anniversary. For sure. We saw the big numbers from the USDA last year, and that really wrecked the market there for a while. And we had a large sell-off. We had some gap lower and some sharply lower days with these very large limits that we have in the cattle. So that's a risk. We know what the market can do. But part of us are saying, okay, so if we saw all those big placements, I mean, this cash just held solid all summer long and did nothing but just kind of crawl higher. So a lot of us just not believing that those numbers were actually there. We'll wrestle with that. So at least we've been down that road. We saw the numbers, we saw it break and came back. So I think that gives us a little bit of a stronger floor to maybe hold on to say, hey, I don't think we just need to just absolutely blast this thing lower. Let's look to the feeder market. What are the cash feeders doing? And they're staying very strong. I talked to several customers all day long about how high these feeders are and how they're going to get some bought. So I hear that, and I think that's evident that there's good demand for these feeders, and there's not enough of them around. And hearing that some of these backgrounding yards getting quite a few phone calls that say, yeah, I got some room here. If you need to feed here, I got some room. So just telling me, I think we're in a little bit of a tight situation yet again, and that's going to help us for the next year.
All right. Just quickly, we are past the McDonald's E. coli story here. The recall is on onions. It's not on beef. So we should be able to recover here if we had any impact at all, right?
I felt like we just kind of brushed it off. I don't think that we just traded it real hard. And the amount of McDonald's news that we had in a couple of days, Donald Trump shows up to a McDonald's, and the rumors are that, McDonald's is going to now switch to beef tallow frying their French fries, where he's awesome. And then the very next day, it's E. coli and burgers possibly. And it was just too much McDonald's news for me for 2 days. I don't feel like the market really did a lot of juking and jiving. That's why we cook hamburger, and that solves any problems that there is. And thankfully it was not actually anything to do with the beef itself. So I think we're going to be okay with that story.
Yeah, that was the good news. We were very resilient during that. Hog market, we made new highs for the move yesterday and then scored a reversal. We're trying to recover today, but do you feel like we're trying to maybe put a top in this market, or are we close?
Yeah, I think if I just stand up and say the hogs are due for a correction every day, one of these days I'll be right. And that kind of feels like what it's been with me. How many interviews have we done? I said, I think these hogs are too high, and that's hopefully you were not listening to that little part, but still leaning that way, that not hearing empty barns. I think that the numbers are there. Our weights are still, above year ago levels, not as much as they were, but I think, with the funds behind this market pushing it higher, the same group that probably was short on the way down when we were over 100 this last year is now in this market and long and pushing it higher. So a day like yesterday, you get those D's hogs above $80, when a lot of us were thinking over $70 was probably too high to get above it and then have a reversal lower. I think that's got to put a little bit of a warning sign out there for some of those fund traders to say, hey, we're maybe at a level that this thing could have a correction. So we're still on this uptrend. It's still holding that line. It looks like we're at about, $77 is where these hogs would need to hold to keep that line intact. But for me, it's correction time, and that's what I'm geared up for. Have been for a while. So hogs have been, disappointing me. Is how I've been trading them for the last several months. But I think we got a little bit of a cash lower, and as we turn the page into November, I think they'll be in a little bit of trouble.
Yeah, it's been an interesting contra-seasonal move for sure. Okay, grains easing back just a bit here today. We're up into some chart resistance, but you got to believe there's a little farmer selling here too. But how far can you really go down with all this demand that keeps coming at the market?
Yeah, I think all of these rallies have run into a little bit of farmer selling, and I think that's absolutely probably a decent move. We want to be selling it on some of these rallies and letting some of that go, because we have a lot of bushels to deal with, and it's been kind of the attitude, let's just sell some and then we'll try to figure out how much we can keep or how much we can store. So those are the questions that we have on all of these. But as we sell off, I just think we have such a firmer floor. I don't know that I've probably felt like grain has had a firm floor for all summer long, but suddenly I'm starting to feel like I think it can. We're just seeing these flash sales every day. We're seeing the demand, and I think for me, it's just revolved around some of these just lower prices. I mean, it's kind of the term you use would be value buying kind of opportunities, and I think that's what's holding this market up. Seeing the several different countries that are diving into grain is great. Is it because we're low priced, or the other conspiracy is, are they diving in ahead of an uncertainty of an election, trying to make sure that they're getting enough grain on hand, so whatever happens after the election, that they've already got some grain? Very well could be a little bit of both, but I'm more leaning towards just the low prices. We've had all this inflation over the last several years, and I think now there's more value to a lower price commodity than what there was before. Even with our dollar surging, getting a little bit stronger, we're still having those sales and seeing them show up.
No doubt. All right, thanks so much, Scott. Scott Farlick with Coima Barlick. That is Markets Now.